Hello everyone. This question is based on depreciation, and we're going to look at question 1 of depreciation in accounting for senior cycle, the 4th edition, and this is just the first higher level question that there is. So we'll just work our way through. The first thing I like to do is read the question, because then when we're going through our depreciation table, it's easy then to kind of know how many vehicles we'll have at the end of the question. So the first thing I want to look at is, so O'Sullivan Transport prepares its final accounts at the 31st of December each year. That should be in every question really. The firm's policy is to depreciate its vehicles at 15% of cost per annum. Okay, so that's important. Calculated from the date of purchase to the date of disposal. So what that means is we'll have to go month by month. So what I mean by that is that if we bought a vehicle or a fixed asset in February, then it would only acquire 11 months depreciation for the year. Then when we're disposing of it, let's say we got rid of it in October, well then it would have we would calculate depreciation from the 1st of January all the way up to the beginning of October, or the end, depending on when we're selling it. So that's just what that means. So I like to call that we're going month by month. We also then have to accumulate this depreciation in a provision for depreciation account. So just like normally, so that means that we'll have a T account they'll be segregated. We'll have a vehicles account or fixed asset account, and we'll have a depreciation of that fixed asset account. So perfect. That should all make sense. Okay, 15% is our depreciation amount. So on the 1st of 1st, 2021, O'Sullivan Transport Limited owned the following vehicles. So we have vehicle 1, vehicle 2, vehicle 3. Okay, so there's 3 vehicles we'll have. So we can say we purchased on the 1st of the 1st, 2018, 1st of the 3rd, 2019, and the 1st of the 10th, 2020. And I'll just highlight the 1st of the 1st, the 1st of the 3rd, and the 1st of the 10th. Now, don't worry too much about that. So what I'm saying is I've now gone over to my table and I'll say, okay, I know there's a van 1, a van 2, and a van 3. On the 1st of the 4th, 2021, vehicle number 3 was involved in an accident and traded in against a new vehicle costing 172,000. So we know there's going to be a new vehicle. Okay, so we'll call that van 4. So we won't have to worry about anything else here. The firm received a compensation to the amount 86,000 for its insurance company, and the net amount paid for the new vehicle is 130. So the 1st of the 4th. So just be wary of the months we're dealing with. Now the next one, the very end of July. So we know that the very end of July is the same as saying the very beginning of August. So that's the same as saying 0108. Okay, so we can think of it both ways. And let's say up here, we can think about that as the 31st of March. Okay, so they're interchangeable. The very first day of the year is the very same as the very last day in the other month. So in this case, vehicle number 1 was traded in for 36,000 against, again, a new vehicle. So that's going to be vehicle number 5, costing 180,000. Vehicle number 1 had a new cooling unit fitted on the 1st of 1st, 2019 at a cost of 6,000. This cooling unit was depreciated at the rate of 30% of cost for each of the first 2 years, and thereafter at the rate of 15% of cost per annum. So we kind of get a trick like this in every question. It's like an upgrade. So whenever we have an upgrade, that's going to be associated with our fixed assets. So it's increasing the value of our van. So it's increasing the value of vehicle 1. Okay. So a new cooling unit, again, the first 2019, so be wary of the month, at the cost of 6,000. Okay, this cooling unit was depreciated at the rate of 30% of cost for each of the first 2 years. So this is just a trick to try and throw you to really kind of separate the really good students from the good students. So the first 2 years we charge 30%, and thereafter it's going to be 15%. So that's not too tricky when we get into the nuts and bolts. So now let's move over to our depreciation table. So we know now that we have a van, or we have a cooling unit associated with van 1. Spelled that wrong, cooling unit. Okay. We then also know that our first adjustment, we have purchased a van 4, and then we've also purchased a van 5 in the same adjustment when we're introduced to the cooling unit. So we now know that our table is laid out the way we won't need to add any more, take away any more in terms of our vans and cooling unit, or upgrades to our vans. Now what we could do is, as we go through the adjustments, we can then add them, so leave space and just so have van 1, 2, 3, and then have cooling unit van 4, van 5, or whatever. But I like to kind of look through the question and know what am I buying first, because then I know which van the upgrade is associated with. So I know that the cooling unit is associated with van 1, whereas if it was associated with van 2, I might have to do something else. I'd put van 2 up here and the cooling unit down there. Okay. So the first thing we should do is just put in the value for what we already know. So we know van 1, what's the opening cost? Well, it's going to be 100,000. We knew that the cooling unit we could say was 6,000. We know that van 2 cost 132,000. We know van 3 cost 148,000. And let's just leave van 4 or 5 for now. So what we're doing in this table is we write down the year that we bought our very first van, okay, that was given in the question. So van 1 was 2018. So there has to be something, we have to leave a space for depreciation in 2018. Okay, so that's what I'm saying. The first one here is just about cost. And then all the others here is all about depreciation. So it just makes it easy when we input it into the T accounts, but it also makes it easy for us when we're kind of dealing with disposals as well for our adjustments. So in 2018, what was our depreciation? Well, we bought the van in 2018, and it was the very start of the year. So it's going to be a full 12 months depreciation. So I'll just say van 1. So full 12 months. So if we're dealing with a full 12 months, we know it's 100,000 at 15%. Okay. And it's 12 months. So it's 12 over 12, or it's just the full 15. We don't have to worry about anything else. So that's a nice question. And it's just 15,000. So we're going to put 15,000. So brackets for a minus. Okay. Did we buy the cooling unit in 2018? No, we bought it in 2019. So there can't be any depreciation for something we never bought. Van 2, again, 2019. Van 3, we bought in 2020. So there's no depreciation for 2018. So moving on now to depreciation for the year 2019. There'll be a bit more in there now at the moment. So van 1. So we've had van 1 for the full year of 2019, and we're working on cost. So we're dealing in the straight line method, not the reduced balance method or reducing balance method. So again, we just put 15,000 in there because we've just kept the van for a full year without doing anything with it. So it's going to depreciate by the full amount. Okay, so that's just going to be 15,000. Now we can introduce van 2. So we bought it on the 1st of March 2019. So that means for this depreciation adjustment, what we're going to have to do is get the whole 132,000 at 15%. But how many months did we hold the van for, the vehicle for? Well, if you use your fingers again, so we have all of March, all of April, all of May, all of June, all of July, so that's 5. All of August, all of September, all of October, all of November, and all of December. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 months. So if you think about it, we're not counting, so no depreciation in Jan or February. Okay, no depreciation. And because we bought it on the 1st of March, we have a full depreciation in March. If it was bought at the 31st of March, then we also would have no depreciation in March. So that's very important. The beginning of the year and the end of the year make a big difference. So we're going to get 10 months of the whole 12. So 132,000 multiplied by 15% multiplied by 10 over 12 is 16,500. So, sorry, that's a cooling unit. 16,500. Looking now at van 3, so there's no depreciation in van 3 because we bought it in 2020. So again, no depreciation. You can't have depreciation on something you didn't buy. And in 2019, we never bought it. So now with the cooling unit, so we'll just do cooling unit. What's really important to note here was our 30% of cost for the first 2 years. Now, the handy thing is we bought it at the very start of 2019, so we don't have to worry about months or anything like that. It's purely 30% of 6,000, and that's all we need to worry about. So 1,800, 1,800. Okay, perfect. Now we're dealing with 2020. So remember, our first adjustment takes place in 2021, so we don't have to worry about any adjustments, or we're not buying any new vans until 2021. So in 2020, we still had van 1 for the full year. That's 15,000. That's nice. We've now had van 2 for all of 2020. Okay, so the full year from January. So what we calculated with this 16,500 was March to December. Okay, so now for the adjustment for 2020, it's going to be just 132,000 at 15% for the whole 12 over 12. So that is 19,800. 19,800. Now the cooling unit, so we've had it now for 1 year, and now we're going to have it for another year. So the 1st of 2020 to the very end of 2020 is another 1,800. So again, 30% of cost for the first 2 years. So again, another 30%. So we bought van 3. So we bought it on the 1st of the 10th. So that means you have it for all of 10, all of 11, and all of 12. So that's 3 months. So what we're going to do is 148,000 at 15%. And we've had it for 3 of 12 months, which is a quarter. So 148,000 multiplied by 15% by 3 over 12 is 5,550 euro. Okay, now the closing, so closing depreciation for van 1 is 15,000, 15,000, 15,000, so 45,000. Depreciation for the cooling unit, so cumulative, which means we add up from the very beginning, each month or each year we add it up, and this is the cumulative amount up there. So we're looking for the cumulative amount for all the depreciation. 1,800 plus 1,800 is 3,600. 16,500 plus 19,800 is 36,300. And then obviously 5,550 is then closing for van 3, because we've only had it for 2020, so it'd be the same amount. So when we're looking at our total, so the closing, so on the 31st of the 12th, 2020, the closing balance is going to be 5,550 plus 36,300 plus 3,600 and 45,000. So that's 90. $90,450. Okay, so that's going to be, remember, closing of 1 month is opening of next month. Okay, so what we mean by that is whatever we have as our closing amount in 2020 is going to be our opening for the 1st of January 2021, which is what we need to do our T accounts for when we see it over here. The vehicle account for each of the 2 years, 2021 and 2022. So, perfect. So we've already kind of gotten the very beginning sorted, and that will help us now going forward with everything else. Now we'll have a look at our adjustment. So this is for adjustment part I. So I've said this is I and this is II. Okay, so some of the most important things to note. We're talking from 01/04/2021. Okay, I'll just zoom in a small bit. Perfect. So we're talking about van 3. Okay, another thing to note. Was involved in an accident and traded in against a new vehicle costing 172,000. The firm received compensation to the amount of 86,000 from its insurance company, and the net amount paid for the new vehicle is 130,000. So when we say that compensation, we can think of that as an allowance, okay, that we received. So that's what we'll do. That's what we'll do with it in our disposal account. So we'll just do what's happening in English first. So we have in our vans account, is going to be affected. Our depreciation account is going to be affected. Our P&L account is going to be affected. Okay, all these accounts are going to be affected. So for vans, what's happening? Well, we're going to be reducing our vans account by 148,000 because we're talking about van 3. Our depreciation now. So we have 5,550 is coming out. Okay, because that's what we accumulated in 2020. And there's also 4 months for 2021. Or sorry, not 4 months, 3 months for 2021. We sold it on the 1st, the 4th, 2020. So again, what we'd have to do is we'd have to look at 148,000 at 15% at 3/12, which is exactly what we did for 2020, 5,550. Okay, so we can actually pop that in here. 5,550 is the amount of depreciation in 2021 for van 3, and that's it. There's no more than in 2020 because we got rid of it. Okay, so 5,550, so that's 11,100. Now for our P&L, we have to then take into account our compensation and the allowance. So we'll just set up a T account to go through the disposal. Okay, so this is just kind of an extract of our vans, depreciation, disposal account, and then just here over the right is just kind of an extract from our bank and our P&L. This is really important when we think about our basics of bookkeeping and our double entry. So we don't need to do this in an exam situation, and we don't have to do any of this in an exam situation, but it should help you to realize where do we put the figures and what effects does that have, what's the double entry of each. So if we go back to the page, just to the adjustment, we can see that vehicle number 3 was in an accident and the traded in amount. Okay, so if vehicle 3 was an accident and we're trading it in, so we have to get rid of the cost of the van, so 148,000. So our van's balance is an asset. Yeah, so this is where we normally put our figures for van when it's increasing. For depreciation, this is where we put our figures where in our opening balance is on the debit side. So if we're taking away from our vans account, we're going to be reducing it by putting it in the debit side. The double entry is going to be disposal. So coming from our vans account, 148,000. Okay, that's all right. Now, it was on, as I said, the 1st, the 4th, so our depreciation is going to be 11,100. So 11,100. So we're reducing the balance and our depreciation, or we're getting rid of depreciation. So what that does is we have to take it away from the side that would be adding it to, which is the credit side. So this goes to disposal. So coming from a depreciation account, we have 11,100. Now, the other two things that are really important is if we're talking about we got a trade-in allowance. Okay. So the vehicle cost, so the cost 172,000, but we paid 130,000, which means that 42 40,000 is what we call our allowance. So if you think about what the allowance is doing of 42,000, it's kind of the equivalent of receiving money from the bank. Okay? Yeah. And as well as that, what's actually even better to think about is when we're talking about our compensation, of 86,000, that's definitely going to hit our bank account. So if we get paid money due to compensation, it's going to increase our bank account. So if our bank account increases by 86,000, the double entry, we know that it's going to affect the disposal account. So if we're double entering it, if we're receiving money and it goes into the credit side of the bank, they don't have to go into the debit side of the disposal. So compensation of 86,000. Okay. So really, once you get the hang of these questions, you don't even need to think about bank. You don't need to worry about bank at all, because you'll automatically start putting compensation and allowances into your into the debit side of your disposal account. But just in terms of, for it to click, what does it do with our bank? Well, if we think of Earl, so Earl is a really good thing to do. So when we're talking about accounts or expenses, when we receive expenses, they go on the credit. And when our assets increase, it goes on it goes into our credit side. Dealing with debit sides, liabilities and gains, or we can call it revenue. And that's what we like to call Earl, because we have E, A. So E and A are on the credit side, and the R and the L are on the debit side. Okay. So if we're increasing our bank account, our bank is an asset, it's going to be increasing our credit, or it's going to be put on the credit side. The double entry for that then is to go to the debit side of our disposal. Okay. And as I said, the more you do it, you won't even have to do a bank account. It'll automatically put into compensation on the debit side, because you know that. Now the allowance, okay, so the allowance is also going to the debit side, because it's also a positive for us. We're not paying as much money, okay? We only have to pay 130. 130 is coming out of our bank into our Vans account, okay? Because we paid, if you look at the question, the net amount paid for the new vehicle is 130,000. So if we're paying money out of our bank, it's going to go here. Yeah. So if we're paying money out of our bank, it's reducing our assets, so it has to go on the debit side. And then the double entry for that is going to our Vans account. 130,000. Okay. But we were also given an allowance of 42. So it cost 172. We were given allowance, it cost 172. We paid 130, so there has to be an allowance as well. So coming from bank, which is 130, plus the allowance makes up our 172,000 euro amount in the credit side. And that's the amount that needs to go in. No matter how much we paid for it, we only paid 130,000, but the value of the van is 172,000. So we can't understate the cost of the asset or the value of the asset at the very, very beginning. 172,000 is what it's worth. Now, the allowance bit of 42,000 will double entry into our disposal. Okay. Now we have it fully done. We balance it. And we add up both sides and see which is greater. So if we have 11,100 and 86,000 and 42,000, we get 139,100. So 148 is greater, so that's going to go into here. So the difference between these two, there'll have to be a balance, or it has to be, we all know that they have to add up to the same amount. So 148,000 minus 139,100 is 8,900. So now this is why we created a P&L account over here, because if this has to go to the P&L, because any losses or gains on a disposal of a fixed asset goes into our P&L account. So if this balance is here, we don't know, God, is that a loss? Is it a gain? We don't really know. But think about our P&L as a T account. So if we're double entering from the debit side, you'll have to go into our P&L 8,900. Disposal. What side is that on? Think of Earl. So it's on the E, the expense side. So the 8,900 is an expense. And what we mean when we say an expense, what we're saying is that we've lost money on the trade of this vehicle. We lost 8,900 because its true value is really, or the net book value is equal to 148,000 minus 11,100, which is 136,900. Okay, that's the net book value, but we only received 86,000 plus 42,000 between our compensation and our allowance, which is only 128,000. Okay, so this is what we got for getting rid of the van. We got a compensation because of the incident, and we got a trade in the 42,000. So they're positive effects, but the van was truly worth 136,900. Its net book value was that amount, so we've lost money there. So that's a way of thinking about it as well. So that can then be, let's say, brought over to our table. So we bought van 4 for 172,000. Now, so there's obviously no depreciation in any of these years because we only bought it here now. So what is the disposal or what is the depreciation for van 4? So we've now had it. So if you're looking at the very end of 2021, from 01/04 up until the 31st of the 12th. So that's all of April, May, June, July, August, so that's 5. September, October, November, December. So 9 months, okay? So we did it for 9 months, 172,000. Okay, so just go back down here. Depreciation 2021 for van 4. 172,000 at 15% for 9 months of 12 is 19,350. So 19,350. Okay. Now we can look at van 2, van 1 and the cooling unit. So nothing happened to van 2, nothing happened to van 1 and nothing happened to the cooling unit. So it's the same amount as we go on. So this might be slightly confusing here, but this is all just for our notes for the opening of 2021. Okay, so don't pay that any attention to the rest of these. So the last, for the cooling unit, we've now the 2 months at 30% are now over. So we have to move on. So it's 15% per annum now. So it costs 6,000 at 15% is 900. So the cooling unit depreciation is now 900 because it's 15% as opposed to 30. Van 2, it's the full amount because nothing happened to it. And van 1 is 15,000 because again, it's the full year depreciation. Perfect. Now, adjustment 2. So what are the key facts? 31st of July 2022. So before I even move on, I'm going to so there's no depreciation for the van 5. So we now have, we're going to add 19,350, 5,550, 19,800, 900, and 15,000. And what we get is 60,600. Yeah, 60,600 so that's going to be your opening balance for that's going to be the amount we put into a depreciation for 2021. Okay, so that's all depreciation. Now, dealing with adjustment 2. So as opposed to doing T accounts this time, I'm just going to go through it in our head to say what actually happens. So what we're dealing with is we're dealing with our vans. So what we're doing is we're taking out 100,000 from our vans plus 6,000 from our vans, because don't forget we're getting rid of the cooling unit with, if we're trading in vehicle 1, the upgrade is attached to vehicle 1, so that also has to go. So 106,000. Now the depreciation, it's going to be the total depreciation for van 1 and total depreciation for cooling unit. So let's do our depreciation. So it's the 31st of the 7th, 2022. So that means that we have all of 7/12 at 15% of cost, which was 100,000. So that was for van 1. Then our cooling unit depreciation, again 7/12, 15%, because we've gone over year 2, we're now in year 4, of 6,000. That's 8,750 plus 525, which is 9,275. So this is going to be coming out of our disposal. So we can actually put that back up here now. So we know that the total depreciation for van 1 in 2022 is only 7 months, 8,750. And in the cooling unit, it's 525. So now we want the total depreciation, because whenever we're talking about a disposal, we have to put the cost, 100,000, as well as all the depreciation associated with it. That's 15,000 plus 15,000 plus 15,000 plus 15,000 plus 8,750. 68,750. For the cooling unit, 1,800 and 1,800. 900 and 525 is 5025. So that added together is 73,750. So total depreciation this is only for 2022, the depreciation, but this is total depreciation. So 73,775 is going to be going into a disposal. Okay. Then let's look at our allowance and anything else. So if the vehicle costs 180,000, was traded, so we got an allowance of 36,000. So allowance of 36,000. So we'll go back to our disposal account and put all those things in. So we're back at our disposal account. We said the first van, or the cost of the cooling unit and van 1, was 106,000. So 106,000 is coming from our vans account. So the double entry is going to be here. So I'll get rid of my Earl. So now there's a few things you have to do here, but it's going to be 106,000. Okay, that goes to disposal. So we're just thinking about P&L now before anything else. Or sorry, do you know what? I'll actually get rid of all the rest of the stuff so it doesn't get confusing. We're starting blank for just for theory purposes about the double entry. So what's happening is we got no money in his compensation. Money will be coming out for vans. Okay, so 106,000. So we reduce our vans by 106,000. Goes into a disposal account. So 106,000 coming from vans. We have to take out depreciation that's associated with the cooling unit and van 1. So the total depreciation for van 1, so van 1 plus cooling unit, is 73,750. So you have to move everything that's associated with what we're trading in. Again, going to disposal. 73,775 disposal. Oh, sorry, not disposal. It is depreciation. Perfect. Now, our allowance we said was 36,000. So we bought the new van. So what did we pay for the van? So if we got a trade-in of 36,000 and the new vehicle costs 180,000, what goes into our bank or what comes out of our bank is 144,000 plus the allowance of 36,000 will double entry into my Vans account. So bank plus allowance of 180,000. Okay, that's all I really need to worry about. So there's no compensation, as I said. Now, which side is bigger? So 73,775 plus 36,000 is 109,775. So with that, we need to balance this. Our profit or our loss goes into a profit and loss account. 3,775. If I double entry that into my P&L, 3,775, going back to Earl, your expenses, assets, revenue, liability. It's on your debit side, so that means that it's going to revenue. So it's a gain, okay? So it's a gain from disposal of fixed asset. So it's a good thing for a P&L account. Now, so we only did that now just to get our P&L. And we don't have to do that for every question, but just to learn the first steps, it's worth doing, okay? So we have everything we need. Now we're going to have to do the full accounts. So was Van 2 touched for that year? No. So it accumulated the total amount of depreciation. Was Van 4 touched? No. So depreciation for the full year of 170,000 at 15% is 25,800. Okay. Talking about Van 5. What's the value of Van 5? 180,000. 180,000 at 15% is 27,000. Okay. Did we have Van 5 for the whole year? No. We only got Van 5 at the very end of July. So we're accumulating depreciation for August, September, October, November, December. 5 months. So we go back over here and we said, okay, 27,000 for the full year. We only had 5 of the 12 months. 11,250. We now need to get the total for all of 2020. So we add them up. 8,750 plus 525 plus 19,800 plus 25,800 plus 11,250. 66,125. Perfect. We said the total depreciation for oh yeah, we already said this was 11,100. So as I was saying, the T accounts we were doing for our depreciation, disposal, and Vans was just like a mock account. We don't have to do this when we're doing the real question, and obviously it will waste a lot of time. So I'm going to do the ones that you should be doing now. We might need a bit more space, so we don't have enough space there. So we'll put it right in the corner, try and get as much space as we can. So we need to do our Vans account. Okay, so we should be able to get all our figures from our table. So the opening So again, if we look at the question, we have to do for each of the 2 years, 2021 and 2022, we have to do a vehicles account. So I just called it vans. It should be vehicles, but it doesn't matter. Vehicles, what we want to do is look at the end of 2020. What was the value of our vans? So we had no depreciation, let's say, for van 4 or 5 in 2020. So then we obviously didn't buy the van in 2020. So if we add up 106,000, which is van and the cooling unit, 132,000 and 148,000, we get 386,000 as or opening balance, okay, or balance brought down from the end of 2020. So this is 01/01/2021. Perfect. So let's make a depreciation of vans. So we can treat depreciation of vans as two things. We can call it a liability. It isn't, but it does the same thing as a liability does, or we can say that it reduces our asset, so it does the opposite of what an asset does, which is probably a better way of thinking about it. So our opening balance is the cumulative amount of what we had. So we had van 1, we had the cooling unit, we had van 2 and van 3 were all affected by depreciation up until the closing of 2020. So the closing of 2020 is the equivalent of the very beginning of 2021. So that's really important to remember. So 90,450 was our opening balance for depreciation. It's reducing our asset, so it's on the debit side. Okay, that should all be starting to click. So what did we have throughout the year? So we said that depreciation then was like, so what happened? We now need to introduce or disposal account now. So if we're talking about a disposal account, we've already gone through the adjustments, so we'll just go over here. So we said that we took out van 3, 148,000. So we'll just speed through this because we've already got it, and you can always just rewind to this for our adjustment 1. So 148,000 is going to a disposal, and give the date as well. So 01/04/2021, disposal 148,000. So 148,000 coming from vans. Or depreciation on that van cumulatively was 11,100. So that's why it's handy to have the table. We've kind of got the total depreciation related to that van when we disposed of it. 11,100 going to disposal. $11,100 coming from depreciation. So we also had allowance and we had compensation. Allowance was 42,000 compensation was 86,000. We said that the credit side was greater, so we had a P&L which was a loss, so that's important to state, of 8,900, and with our disposal account we never have balances because we're only dealing with either profit or loss that go to the profit and loss account. So every time we have disposal, we don't bring anything down. We don't call anything down or bring anything up. So then don't forget that coming from our bank plus allowance was the new vehicle, van 4, which you bought for 172,000. Then depreciation. So what was so now we're looking at, let's say, the very end of 2021. So in 2021, the depreciation was 60,060. Sorry, 60,600. Going to P&L, we always put our depreciation into P&L. That's important. I remember if we double entry that P&L, it will go here, 60,600, and doing Earl, it's an expense. Okay, so that makes sense. That ticks the box. We're like, okay, we're definitely on track here now. Now what we need to do, anything that's in the balance sheet, we need to balance it and bring our balances down. So which side is bigger? 050. So 151 050. So you have 139,950. Okay, 139,950 is our balance called forward. So then we have to bring it down. Balance called down. 100. And 39,950. Balance called down. Looking at our vans, we know that we can even see it, the credit side is much greater. We got 558,000. So our balance called forward, which should be the 31st of the 12th, 2021, is 410,000. So 410,000 balance brought down, just called down, brought down, that's the wrong thing. Called forward brought down is 410,000. Perfect. Okay, let's keep going. Again, talking about our disposal. So we have to take it from our vans. So it was 106,000 coming from vans. Going to disposal. So that will come over here. 106 coming from vans. We said depreciation was 73775, so it reduces our depreciation or takeaways from our depreciation. 73,775 depreciation. We then had the allowance. So they told us straight off what the allowance was, 36,000. So 36,000. We had 109,775, so we had 3,775 going to our P&L as a gain. Perfect. Now that's the disposal account is done. Just need to finish off our depreciation and our vans account. So so we had a new van bought through our bank and our allowance of 180,000. Our depreciation amount 66,150. Or sorry, 125. Again, P&L, it's a loss or it's an expense. Which side is bigger? Well, you can see that the debit side will be bigger. And that makes sense because you know the depreciation, all our opening balances are on the debit side. So 206,075, take away our depreciation associated with our disposal, so our van 1. So we are left at 132,300. Balance called forward. Balance brought down 132,300. Don't forget this here. That's done. Our depreciation account done. Bank plus allowance, that's actually done as well. Which side is bigger? Well, we know that the credit side will be bigger because or whenever we have the asset, it's always coming on the credit side. So 590,000. 590,000. So 590,000 take away 106 is 484,000, which is our new opening balance for 2023. So I might just put in dates here just so we remember. So our opening balance is for 01/01/2021. The things to do with the bank was 01/04/2021. The disposal 01/04/2021. Balance brought down 01/01/22. This was 31/12/2021. So we should be doing this as we go along. Disposal was 31st of the 7th, 22. 31st of the 7th, 22. 31st of the 12th, 2022. 01/01/2023. So that's how it all works there. I won't do it for depreciation because it's the exact same. Now the P&L will always be the end of the year. So 31st of the 12th, 2022. Just make these a bit nicer. Didn't make the T accounts big enough. And that is the process for doing or depreciation questions. Just kind of what you get in a leaving cert question. Might be missing a few intricate details that they'd add in. Now we only have to do a vehicle account, provision for depreciation account, and a disposal account. When I was doing, again, as I said, when I was introducing my bank and my P&L over here, it was just for explanation purposes. Really, we shouldn't be doing any T accounts except for the ones at the end. Otherwise, we'll be just going way too slow. A lot of the adjustments can be done, jotting them down and then throwing them into the T account as we go. The depreciation table is very handy for getting our balances. So the opening of 2021, opening of 2022, opening of 2023. Oh, sorry, apologies, it's my fault. The opening of 2021, then our depreciation charge for 2021, depreciation charge for 2022 that goes to our P&L. And then here we get the total depreciation on the vans we disposed of. So that would help us when we work with our disposal account and we put them in. So hopefully that has made it somewhat easier to do the depreciation questions. I know there's a lot of scribbling and stuff going on, but you'll find that as you do these questions, the most important thing is scribbling on the question sheet, highlighting things, highlighting months, counting months out in your fingers, looking at allowances, looking at depreciation amounts, all that is really important. And the more practice you do, the better you'll get at it. So don't worry about anything like that. So thanks for watching. Goodbye.